Good afternoon, and thank you for joining us for our annual Payroll and HR Best Practices webinar. My name is Debbie Crabtree, and I'm a Senior Manager in our Government Accounting Services practice. I'm joined today by Jenny Andrews, a Senior Human Resource Consultant on our HR Advisory team. If you have any questions regarding this presentation today, you can certainly contact Jenny or I, or you can email events@sikich.com. So let's go ahead and get started with the top 10 payroll best practices. Some of the slides we're going to discuss in general, and some of the topics we're going to dive into as I highlight recent changes to laws and regulations by the IRS. So first I want to start off talking about the common payroll reporting errors noted by the IRS. Failure to back up withholding on payments to vendors when required to do so. The one item I wanted to note here is that the backup withholding rate has changed effective January 1st, 2018. It is now 24%. It had previously been 28%, but effective January 1st, 2018, it's now 24%. The IRS publication 1281 has additional information on this change and also discusses when the backup withholding is required. Most common among the entities that we're talking to today is when vendors fail to provide a W-9 and the tax identification number is not available to the entity in order to issue 1099 miscellaneous forms. The entity is then required to back up withhold at 24% of the amount that is owed to the vendor. Second, the forms W-9 and W-4 are not being used or not updated when necessary. The item I wanted to highlight here is that with the Tax Cuts and Jobs Act that was passed in December of 2017, the IRS followed up in June of this year with a draft W-4 for 2019, and it had significant changes. However, in September, the IRS announced that after feedback with the payroll and tax professional communities, the 2019 version of the Form W-4 will be similar to the current 2018 version. However, stay tuned because important changes are expected to be incorporated into the 2020 Form W-4. In the meantime, the 2019 W-4 draft is available, and they're expected to finalize it shortly here to start January 1st of 2019. With W-9s and W-4s, we recommend that you encourage employees and vendors to submit a new form at the point where if there are any changes and they would like a different amount withheld, especially in terms of the employee with the W-4. The IRS has done significant notifications out to employers about how employees or individuals are affected by the Tax Cut and Jobs Act this year, and they have a withholding calculator on the IRS website to assist individuals in determining if they have enough money being withheld from their paycheck, and if not, how they can change their withholding amount if they have too much or too little withheld by submitting a new W-4 to the employer. They also noted failure to correctly complete Form 1099, failure to follow electronic filing requirements, and incorrect or missing employment tax deposits as common reporting errors in the payroll area. Other common reporting errors include not reconciling the Form 941 to the W-2, W-3 information, treating groups of workers as independent contractors rather than employees, failure to include taxable non-cash benefits in employee wages, and we're going to go through some examples of that, how to properly report fringe benefits in a couple of minutes, failure to apply the accountability rule to reimbursements and allowances, and failure to correctly apply withholding rules to election workers and public officials. For our governmental entities on the line today, we want to make sure that you are following the proper rules for election workers and public officials, and detailed information is available on the governmental entities page of the IRS website. Okay, so now we're going to count down the top 10 payroll best practices. So number 10 is Know the Rules, your online resources. So here on the screen, I have several resources available. I just want to highlight a couple of those. The Tax Cuts and Jobs Act on the IRS website is at irs.gov/tax reform. And more recently, in the last couple of weeks, IRS publication 5307 Tax Reform Basics for Individuals and Families is available. There's also information on this website that would be important from the employer standpoint, and definitely recommend that you refer your employees to this section of the website if they have any concerns or if they need any assistance in filling out their W-4. I've then listed several IRS publications which change every year, so I recommend that in December, January timeframe, you take a look at these publications and look at what may have changed. They usually have at the beginning of each publication what's new section, and so I would recommend that you take a look at that. There's also a self-assessment checklist on the IRS website. What that will do is allow you to take a look at the questions and the information that the IRS would be asking you for if they came in for a compliance check or an audit, and allow you to see if you are in compliance before they do come knocking on your door. The last item listed here is the IRS videos, which are located at irsvideos.gov. Can be very useful. You may find some specific instructions that would help you in complying with the IRS regulations. Also wanted to mention, because we do have a few governmental employers on the line, the division of the IRS specific for governments is the Federal, State, Local Employment Tax Division, which is FSL /ET division. It was formerly known as the Federal, State, Local Government. But when you go on the IRS website, if you do a search, you'll be able to find that, and there are very specific FAQs that will assist governmental employers in making sure that they are following the IRS regulations. And then finally, I wanted to mention there is a Payroll Professionals Tax Center located on the IRS website, and they have hot topics, worker classification information, and employee-employer tax information. Best practices number 9, verifying employee information. So there are 3 possible services that I've listed here. All of the options are free, they're quick, and what it allows you to do is verify Social Security numbers of employees or the FEIN number of vendors for issuing the 1099 miscellaneous. Recommend that your entity have a process in place so that you do this matching program in advance of issuing W-2s and 1099 miscellaneous forms, because as you know, it may take 9 months or longer for the IRS, if information does not match up, for the IRS to notify you, and then you're well into the new fiscal year. The 3 options that I mentioned here is the E-Verify service through the U.S. Citizenship and Immigration Services website, the Social Security number verification service on the Social Security Administration's website, and third is the TIN matching program using IRS's e-services online tool. I can talk specifically about the third option because personally we use that for our clients. And what this is you register as an individual on the e-services online website, and then once you enter your personal information, then someone from the entity matches you up and allows you to do searches and use the TIN matching program. And what that service does is you can upload data and receive an email within 24 hours showing if the FEIN number and Social Security number match the IRS's data. Or if you just have one new employee, you can enter the information and you can immediately receive a response there on the screen. So I do recommend that you take a look at these options because it's better to have correct information before you file the W-2s and 1099 mis. The IRS video portal does have a video on the TIN matching program if you would like to investigate and take a closer look at that option that's available to everyone. Best practices number 8, take advantage of technology. Use the accounting information systems, make sure it's integrated with payroll functionality and automated processes. For example, automate deductions and link the information to tax tables so that there's less manual updates. For more from an accounting side, but also linked to the payroll area, would be consider setting up a payroll bank account with sweeping features. It's also known as a zero bank account. And then in the area of the general ledger account, separate your liability accounts on the general ledger so you can easily identify if there's an issue, if you paid too much or too little to the feds, for example. You also want to automate your time tracking with automatic timesheets that are approved by a direct supervisor. You want to file your reports electronically with the IRS, the state government. You want to encourage direct deposit by your employees. Best practices number 7 is to maintain records. Proper documentation for each employee. I know Jenny's gonna more often the HR area discuss proper documentation that's required to be in each employee's file. I also want to make sure you keep your payroll records for the entity as required by law. In this area, we do encourage employers to remind the employee to review your W-4 at year end. However, you're not required to fill out a new one unless you are claiming exempt from federal income tax. Then the employee does need to fill out a new W-4. Payroll best practices number 6 is to maintain a payroll calendar. I know many in the payroll area will create a calendar at the beginning of the year. So upcoming for 2019, mark on the calendar when your payroll dates are, if you're bi-weekly, when you are required to file with the IRS as far as payments, and then filing 941 forms, whichever is specific to your entity. I also recommend, I know a lot of people already do this, is a best practice would be to pay the withholding to the vendors, the feds, the state, and so on soon after the pay date and post it to the general ledger on a timely basis. I know over in the accounting area, they appreciate when all of the information for one pay date does hit the general ledger and all the payments are made on the same pay date. It just makes reconciling easier from an accounting standpoint. Okay, payroll best practices number 5. And pay attention to the payroll tax payments and deadlines. So a couple of specifics here that I wanted to mention. From the federal standpoint, we have, of course, income tax, and the one item that is new for this year is the supplemental wage rate has been reduced to 22% in 2018. So let's talk about that for a brief moment. The supplemental wages is defined as wage payments that are not regular wages. For example, bonuses, overtime, accumulated sick leave, or retro pay. So when you do have to make those types of payments, you of course can pay that as part of the employee's regular payment, or you can separate it into a separate paycheck using the supplemental rate. Now, prior to 1/1 of 2018, that rate was 25%. It is now 22%. However, the IRS notice didn't come out before 1/1 of 18. So if you did start to make those payments and you made any of those types of payments at the higher 25% rate, or before that notice came out on February 15th, then you can, but are not required to make a correction on with a 941X form. But I do recommend that you take a look at that, and then all future supplemental wages going forward would be at 22%. Also, in the area of the federal, we have Social Security at 6.2%. It continues to be there. The wage base for 2018 was $128,400. The wage base for 2019 has been set at $132,900. And so, of course, what that means is that if you have any employees who have Social Security taxable wages greater than $132,900 in 2019, then you do not withhold the Social Security, nor do you make the match for the 6.2% on the employer side. Of course, you have Medicare at the 1.45% with no wage base, and then you have your additional Medicare for your high income employees. Unemployment on the federal side, similar to in previous years. Of course, if you are a governmental entity, that is not applicable from the federal standpoint. In the area of the state, we have income tax, of course. I know we have several logged in from different states, so I'm not going to talk too specific about that, but if you have state income tax, make sure you are withholding that based on the state W-4 form from the employee. And then we have unemployment taxes for the state, again, not applicable to all entities. Governmental entities have the option to do a pay-as-you-go for unemployment, or to do a percent of the applicable wages. So certainly if you're a governmental entity and you have any questions about the options that are available to you, you can certainly contact us and we can talk more specific about that option that's available. We also want to mention the deadlines. The due dates, make sure you're aware of the due dates to remit payment to the feds in the state and all of your other vendors for anyone that you're withholding from their wages, and also knowing your quarterly and as well as your annual payroll tax return deadlines. You probably all know this, but I just want to mention, just because it is somewhat new in the last couple of years, but starting with the 2016 forms that were due in January of 2017, the forms are due to the Social Security Administration by January 31st, as well as the employees. And then on the 1099 miscellaneous form side, it is also due to the IRS if you are entering information and reporting information in box 7, which is non-employee compensation. So please take a look at that. It is a little bit of old news, but I just wanted to highlight that because it was a change in the last couple of years. Okay, so then our next payroll best practice is number 4, maintain payroll integrity with payroll reconciliations. So we recommend that you perform a year-end reconciliation before filing your W-2s and your 941s. What that means is to add up all of your quarterly 941s, including your fourth quarter 941, match it up to your W-2, W-3 information, because the Social Security Administration will compare the 941 information to the W-2, W-3 information. You want to do this before you do any of your year-end filing, because if you have any adjustments, you can make those adjustments on your fourth quarterly 941 in an attempt to not have to do a 941X form. You also want to make sure from the accounting side that you do a reconciliation to the total gross wages on the financial statements. Of course, there could be some reconciling items such as pre-tax items that reduce your taxable income that would be reported on your W-3, but it is a good check to make sure that that information balances as well. The IRS video portal does have a video that shows how to reconcile your 941, your W-2, W-3 information, as well as to gross payroll. Also, I wanted to mention at this time the health insurance reporting information. If you have less than 250 W-2s, it is still optional to report the information. And if you have greater than 250 W-2s, it is required. Keep in mind that this is not taxable information that you're reporting in the area of the health insurance. It is informational to the employees. And you also are reporting the employer and the employee health insurance premium information on the W-2, whether you are doing it because it's required or because it is optional. Best practices number 3, to ensure proper worker classification. So this is a very common area if the IRS were to contact your entity for a compliance exam or an audit, is for them to ensure that the individuals are properly being reported as employees with a W-2 or an independent contractor who would be receiving a 1099 miscellaneous form. Of course, with a W-2, the employee would be paying taxes or having taxes withheld, and the employer would as well. So we want to make sure that everyone is properly classified. It is a rare situation that an individual would receive both a W-2 and a 1099 miscellaneous from the entity. A common example would be you have an employee, maybe the person retired, and now has his own painting business, and he's come back to the entity to paint a conference room, for example. In that case, you would want to make sure that he has properly set up his painting company. In that case, it would be an independent contractor with his own tax ID number for that company. If he meets all of the category, the descriptions here to be an independent contractor. But in that case, he's getting a W-2 with his Social Security number, and his painting business is getting a 1099 miss. So it's rare to have the individual receive both. But in order to determine that your specific situation is properly set up and everyone is receiving the proper forms and being taxed properly, I recommend that you check out the IRS's website for what they call the 20-factor test, and there are 3 categories. First is behavioral control, who has the right to direct or control how the worker performs the specific task. And then there are several questions asked within the behavioral control category. The second category is financial control, who has the right to control or how the business aspects of a worker's activities are conducted. And then the third category is relationship of the parties and how the parties perceive their relationship as an employee versus an independent contractor. So lots of information on the IRS website that we recommend you check out if you have a specific question, a situation in question. Okay, our next best practice is number 2, which is understanding the taxability of fringe benefits. Lots of questions come into our firm from clients regarding this information. So I do want to spend a little bit more time here on best practices number 2 regarding fringe benefits. The first is to understand the general rule that compensation to an employee is taxable unless there is an exception. So we're going to talk about some of those exceptions here. However, keep in mind that cash and cash equivalents are never excluded from income. There is no minimum value. If cash is given to an individual, it is taxable. The second area I wanted to talk about is the accountable plan and what that is. An accountable plan for employee reimbursements is defined as the expense was for a business reason, there are adequate receipts provided by the employee, and that any excess reimbursement is returned to the employer. If that is the case, it is considered reimbursement on an accountable plan, and there would be no taxation on that reimbursement. However, we're going to talk about some other items that would be considered fringe benefits that would be taxable. Also wanted to mention the correction of prior year fringe benefit taxation. Just in general, if you determine that a fringe benefit was provided to an individual in a prior year, but that it was not properly taxed, there is recent IRS guidance for when an employer needs to gross up the payments to an employee when the benefit should have been taxed and it is being corrected in the current year. So the IRS guidelines for this, which is very recent, is PMTA 2018-015. And that highlights the differences between the federal tax liabilities for employers and the tax liabilities of employees, particularly with respect to employees' tax liabilities as a result of not properly taxing in the prior year. The employer's payment in a later year of taxes, when it should have been withheld from the wages paid in the prior year, does not create additional compensation or wages to the employee in the current year. However, the IRS did state that it is different regarding the payment of the employee's FICA tax liability. So that is handled slightly different. If the employer pays the employee FICA tax without recouping it from the employee, either by direct payment or by a wage deduction in the current year, the employee is considered to receive a taxable benefit in 2018, and the wages would need to be grossed up for that. Again, it's lots of detailed information. I recommend that you do check out PMTA 2018-015 if you have a situation like this, because this is different guidance than what was provided by the IRS in prior years. So now we're going to talk specifically common questions in the fringe benefit area. Payments to board members. I know that we have a couple of governmental entities here on the line, so I just wanted to mention that payments to board members do need to be included on a W-2. It is not a 1099 miscellaneous. However, if it's on an accountable plan, that of course would be different, but if it is determined to be a taxable benefit, it does go on a W-2. An example would be in a car allowance or internet, possibly, that's provided to the board members. Second, the Employee Achievement Awards. This would be a length of service or a safety award. The employee can exclude from wages if the award is tangible personal property. However, that does not include cash or cash equivalents, gift cards, gift coupons, gift certificates, tickets to the theater or sporting events, etc. So if you have any questions on that, I definitely recommend, if you have a specific item that you would like to see if it is taxable, please take a look at that. Gift cards, in the area of gift cards, it is considered cash, so it would be taxable. There are a few exceptions, and in order to determine if there is an exception, it would be a specific item of minimum value. It is infrequently provided to the employee and is impractical to account for. The last item on this slide would be to talk about wellness incentives. Wellness incentives would be an incentive that the employer provides the employee to promote the health of the employee and provide the employee with rewards for taking action intended to promote their health. Recent guidance has been issued with a specific discussion on gift cards, where there's a limitation that the gift card can only be used for Section 213 medical expense, for example, prescription medication. If that is the case, it would not be subject to employment taxes. It would not be considered wages. However, an example of a time that a wellness program reward would be is if you are receiving a reimbursement for gym membership. That is an example of a time where that would be a taxable fringe benefit. So a couple of other common questions related to fringe benefits. You have employer provided vehicles. So if the employee is using an employer-provided vehicle, personal use of that vehicle is taxable, including the daily commute. An exception is if it is a clearly marked police or fire car, or it is unmarked, but the individual is allowed to carry a firearm and make arrests. The next area is employee cell phones. So about 10 years ago, employee cell phones, employees were required to track how much of the cell phone use was personal versus business. However, the IRS, about several years ago now, though, has determined that that detail is not required and that personal use is not taxable and you do not need to maintain detailed records. Employees, uniforms and work clothes. If it is not an accountable plan, when the individual is reimbursed, then it is not taxable. However, an important key point here is that if the uniform is suitable for everyday wear, then that would be taxable. An example that I often use is police detectives being reimbursed for like khaki pants, for example. That would be considered suitable for everyday wear, and that would be a taxable situation. A common question in this area is whether a logo on a uniform shirt would count as suitable for everyday wear or not. And the logo does not make it a tax-free uniform. The group term life insurance. This has been around for a long time, but I did want to mention it because it is common and it's a common question. Is if you are providing life insurance for individuals, you can exclude up to $50,000 of life insurance coverage from the individual as taxable income. Publication 15-B has the table to determine the taxable amount for any coverage above $50,000. It is not subject to federal income tax. However, it is subject to Social Security and Medicare. Another common question that we receive is, how do you tax this? Well, I've seen it done a variety of ways. One would be to tax it throughout the year on every paycheck. One would be on the last paycheck of the year, and I've actually seen it done just thrown on the W-2 to increase the taxable income at that point. The moving expenses. So the last two items here I want to talk about are new or changed here for 2018. So I want to highlight these. Moving expenses are includable in employee wages beginning January 1st, 2018. This change is from 2018 to 2025, pending any other changes in the IRS regulations. There is an exception for members of the U.S. Armed Forces if certain criteria applies, and this is applicable whether the reimbursement is paid to the employee or to the moving company. This is a change from prior year, so if you are reimbursing any moving expenses, please make sure you are including that employee wages as taxable income. One of the common questions, especially since this is the year of transition and this change, is if reimbursements by the employer it happens in 2018, but it's for expenses incurred in a prior year, they are not subject to federal income and employment taxes. So to determine whether it's taxable or not, the question is when were the moving expenses incurred? Finally, we have the bicycle commuting expenses. These are included in employees' wages beginning January 1st, 2018. And they are still deductible by the employer through 2025. And best practices number 1 would be to create an internal controls and procedure manual. Implement checks and balances within the payroll department. Make sure that you have the internal controls in place. Choose very general types of internal controls. One is preventive, which would be internal controls that are designed to prevent errors or fraud from occurring within a certain process. An example would be segregation of duties, limiting access to check stock and access to the system, which would be restricted by user IDs. The second type of internal control would be detective control, designed to find errors or fraud after they have occurred. So for example, reviewing financial reports, completing bank reconciliations, making sure that someone who is reviewing payroll is not the same person who is processing it. In the area of internal controls, we also recommend that you consider a payroll audit by someone who is not regularly processing payroll. Along the same lines as internal control, we also recommend that you have a step-by-step procedures for processing payroll so that it is done consistently each payroll and of course accurately. This will also assist in the cross-training within the finance department. So if there are any changes or leave of absence, that the payroll for the entity, that is covered and everything continues on as normal. So with that, I'm going to go ahead and turn it over to Jenny, who's going to cover the key HR items that are needed as you close out 2018 and head into 2019.
Good afternoon. My name is Jenny Andrews, and I'm an HR consultant with Sikich HR Advisory Group. And today we're going to briefly touch on some key items and topics to prepare you for 2019, as well as introduce you to some exciting new products and services that we now have available. So let's get started. As you wrap up 2018 and prepare to start planning for the new calendar year, it's time to once again review your human resources checklist. An HR checklist will help to guide you in your efforts to remain compliant and implement your best practices in 2019. We've provided some items here that we think sometimes get overlooked, and we want to make sure that you keep them in the forefront as you move forward into the new year. The first one would be to update your work posters. Your work posters may change to reflect new laws, regulations, and contact information for government agencies at the state and federal level, as well as local and municipalities as well. For 2019 specifically, many states and local jurisdictions have new minimum wage rates that will be displayed on the new posters. Check that you have all updated required employment posters and that they are placed in the prominent locations visible to all employees, and they are displayed where employees report to work. Okay. And the next would be to update your state and federal forms and your new hire packets. That would include your W-4s, your Form I-9s, and any FMLA forms and any other forms that you have that have a date on them. You want to conduct an I-9 audit. This is a great time to review your Form I-9s to ensure that each is complete and accurate. Compare those to a list of your current employees to confirm that there is an existing I-9 form on file for each employee. So audit employee files. Make sure your employee files are finalized and include all of the documents necessary to complete the employee file. Do not include documents that are considered unfinished or problematic should you be audited. Review your record retention policy. You want to double check that your records are in order and that your policy is up to date. You want to distribute any annual notices. Certain states require employers to provide annual notices to their employees covering various relevant topics. For example, some states mandate that employers must distribute a notice concerning the earned income tax, the EITC, on an annual basis. You want to conduct an HR compliance audit review, or sometimes called as an assessment. This will help you reduce or eliminate any potential liability or exposure and provide you with the comfort and assurance that you are following all of the employee regulations that cover you and your entity. You want to make changes to your 2019 plan limits, incorporate the new 2019 dollar limits for various employer-sponsored retirement and welfare plans in your summary plan descriptions and participant communications. Additionally, make necessary changes to your payroll system to apply the new IRS limits for 2019 that Debbie had referenced earlier. Again, as Debbie had discussed, you want to confirm your employee classifications. You want to review the Fair Labor Standards Act and the IRS guidelines for exempt versus non-exempt and 1099 contracted independent contractors to ensure that each are properly classified. In the United States alone, employees filed more than 7,500 federal wage and hour lawsuits last year, a jump from nearly 400% in the past 15 years, per a study by Cithro Shaw Law Firm. Some of the top triggers were worker misclassification and unpaid off-the-clock work. You want to create and communicate your 2019 holiday calendar as well as your payroll calendar, as Debbie had mentioned. And you want to update your company organization chart. You want to create and communicate your 2019 training schedule and expectations. Note any required training such as special licensing or certifications that are needed for specific jobs within your company. You want to schedule company-wide training on harassment and respect, bullying in the workplace, retaliation and discrimination. And you want to identify and schedule any required management training. Also, this would be a great time to update your job descriptions. Review and update your job descriptions to ensure they accurately reflect roles and responsibilities of all positions within your company. Confirm that you have the detailed descriptions for every position in compliance with the Americans with Disability Act and the United States Equal Employment Opportunity Commission. You want to review your onboarding and orientation practices. Does anything need to be updated or refreshed? You want to develop or review your formal compensation plans and structure. When was the last time a market analysis was conducted to confirm your compensation plans are competitive? Schedule and complete your performance reviews if you haven't already done so. Review and update company policies. Changes in federal, state, local, and municipal laws or company practices may require that you update your workplace policies. This is an opportunity to review the policies and confirm that they comply with the current employment laws and reflect the current benefits and practices of your company. Some of the hot topics to take note of when you're doing this review is equal pay and wage transparency, release and request of salary history for employees and applicants, criminal background checks, parental leave, pregnancy accommodations, protected time off, leave laws, paid sick leave, paid family leave, safe leave, and military leaves, violence and weapons in the workplace. You want to review and update your employee handbook. You want to be sure to capture any changes from the previous year, including regulatory changes and updates to all policies that are needed. And once you've updated that, you want to be sure to distribute an updated handbook to every employee and obtain a signed acknowledgement form. You want to also take this opportunity to review your employment application, making sure that you're looking at not only your paper forms, but on your online applications. Have anything changed that you need to update? And also would be a great time to remind your employees to update their personal information for benefit cards, tax documents, etc. Here are some of the main items employees should review to ensure accuracy of their company records: their home and address, mailing address, phone numbers, beneficiary for life insurance, 401k plans. Has there been a name change? Make sure that you have the most current emergency contact information on file. Update their dependent information and any payroll deductions that they might want. And finally, you can review your wellness programs and your initiatives for 2019. See how you're going to go about communicating those to your employee. So some hot topics that we have in the news: the Ledler Annual Employer Survey of 2018, the Ledler's 7th annual survey completed by over 1,000 in-house counsel, HR professionals, and C-suite executives was released in May of 2018. And highlights show that 75% of those surveyed agree that the new labor and employment requirements at the state and local levels have led to compliance challenges for all employers. Issues in the headlines most impacting the workplace, the top 3 are sexual harassment, gender pay, and immigration policy. The Me Too movement has led to many changes in the workplace. 55% of the employers had to add training for supervisors and employees, and 38% updated their HR policies and/or handbooks. As far as looking at gender pay, 61% of those surveys have conducted audits of their current pay practices and of their salary data, and looked at their pay practices to make sure that they have all of their updated information in them. State and local governments are increasingly adopting law and regulations that prohibit employers from requesting salary history information from job applicants. The laws are aimed at ending the cycle of pay discrimination, and some go further than merely just banning pay history questions. A few also prohibit an employer from relying on an applicant's pay history to set compensation if discovered or volunteered. Others prohibit an employer from taking disciplinary action against employees who discuss pay with coworkers. Currently, 11 states and several cities have banned the practices of asking job applicants for information regarding their previous salary. Massachusetts was the first state to enact this type of law in 2016, and in the years since, the laws have increasingly gained momentum and attention. Other states have gone in the other direction and have specifically blocked cities and counties from enacting these laws, such as in Michigan and Wisconsin. On the local level, Philadelphia's salary ban law is also currently on hold due to a challenge that it violates the First Amendment. Other cities with salary bans include San Francisco and New York City. Both have ordinances prohibiting private employers from asking about pay history. Some organizations, even though they operate in states where salary history questions are not prohibited, have decided to stop the practice as a matter of policies, such as Amazon, Google, Starbucks, and Bank of America, just to name a few. In January, new salary history bans will go into effect in Connecticut and Hawaii. These are likely to be a continuing topic and trend for employers to watch in 2019. Ban the box law. As of July of 2018, 31 states, the District of Columbia, and over 150 cities have enacted some kind of restriction on employer inquiries about an applicant's criminal history. Some laws apply only to public employers, while some apply to both. In Texas, the city of Austin has a ban the box law that covers private employers with 15 or more employees. These numbers continue to grow across the country, and almost 3/4 of the United States population now lives in a jurisdiction that has a ban the box law. Credit reports is another hot topic. Some employers routinely, as part of their hiring practice, run background checks that include a credit report. In many states, the practice is now a violation of law. 12 states now prohibit the use of credit history in hiring decisions: California, Colorado, Connecticut, Delaware, Hawaii, Illinois, Maryland, District of Columbia, Nevada, Oregon, Vermont, and Washington. New York City's Human rights law also prohibits most employers from making employment decisions based on an employee's or applicant's consumer credit history. Immigration. ICE is the federal agency responsible for upholding the laws established by the IRCA, which is the Immigration Reform and Control Act, which requires employers to verify the identity and work eligibility of individuals they hire. Back in October of 2017, the then acting ICE Director, Tom Homan, announced ICE was upping enforcement and would cease to quadruple I-9 audits. And this prediction proved to be accurate. ICE recently announced that from October 1st of 2017 through July 20th of 2018, Homeland Security opened 6,093 worksite investigations, served more than 5,200 I-9 audit notices, and made 675 criminal arrests and 984 administrative worksite-related arrests. In comparison, during the entire fiscal year of 2017, ICE conducted only 1,716 acts. That's a staggering increase from 2017 numbers and the highest number of ICE audits ever. Failure to follow the law can result in criminal and civil penalties. In fiscal year 2017, businesses were ordered to pay $97.6 million in judicial forfeitures, fines, and restitution, and $7.8 million in civil fines. The costly fines can add up. For example, I-9 paperwork violations can be as high as $2,191 per form. Next topic is expense reimbursement. Effective 1/1 of 2019, Illinois will become the 9th state to mandate that employers reimburse employees for expenses incurred carrying out their job duties. California, District of Columbia, Iowa, Massachusetts, Montana, New Hampshire, North Dakota, and South Dakota already have this requirement. Illinois will have one of the most expansive employee expense reimbursement laws in the country. The act requires employers to reimburse all necessary expenditures or losses incurred by the employee within the employee's scope of employment and directly related to services provided for the employer. In contrast to California's law, Illinois' new law gives more control and flexibility to the employer. Bottom line, the best way for the Illinois employers to prepare for the new expense reimbursement law is to take stock of their current reimbursement policies and ensure such policies are in compliance with the new law, they're in writing, and clearly set forth what expenses are authorized and the amounts that are authorized and any requirements for such reimbursement. Paid sick leave. While there is no federal law requiring private employers to provide paid sick leave, more and more states and cities have passed laws mandating paid sick leave. In 2014, there were only 4 paid sick leave laws, Connecticut being the first. In 2018, we now have 11 states with paid sick leave laws applicable to private employers. Arizona, California, Connecticut, District of Columbia, Massachusetts, Maryland, New Jersey, Oregon, Rhode Island, Vermont, and Washington. And there are currently 19 local paid sick leave laws across the country. New Jersey has approximately 13 local laws that was replaced effective October 29th of 2018 by a new statewide law. California has a state law and 7 local laws: San Francisco, Oakland, Emeryville, Los Angeles, San Diego, Santa Monica, and Berkeley. Other leave policies. Pregnancy accommodation. As you can see, there are 6 states that offer special requirements. Most are based on or expressly extend the ADA, or Americans with Disability Accommodations, to pregnant workers. Some have employee thresholds, but many do not. In August 21st of 2018, Illinois expanded its workplace protection for nursing mothers with further explanation on their break time allowances. There's 4 states that mandate a separate pregnancy leave, which is separate from the Family Medical Leave Act. And additional leave may be required as part of a reasonable accommodation. There are several states that have some type of leave related to parental leave or school leave, and also domestic violence. And also, I want to take time to talk about a new employer tax credit law, which is paid FMLA, or Paid Family and Medical Leave Act. This applies for tax years 2018 and 2019. It was part of a tax reform legislation passed in December of 2017. To be eligible, an employer must have written the policy that meets several requirements as detailed in Notice 2018-71, and they must provide at least 2 weeks of paid family medical leave to full-time employees and a prorated amount of paid leave for part-time employees. They must pay for leave that is at least 50% of the wages normally paid to the employee. Eligible employers who set up qualifying paid family medical leave programs or amend their existing program by December 31st of 2018 will be eligible to claim the employer credit for paid family and medical leave retro to the beginning of the employer's 2018 tax year for qualifying leave already provided. If you need more information, you can go to the irs.gov site for detailed guidance on the new credit. The next topic, which I'm sure everyone is familiar with, is sexual harassment. Some employers erroneously believe that the only need to provide sexual harassment training and other forms of workplace harassment prevention training to employees in states and local jurisdictions that have statutes requiring such training. While California, Connecticut, Delaware, Maine, New York State, and New York City have passed statutes requiring sexual harassment training, other federal and state laws, regulations, and court decisions have made it clear that employers should provide anti-harassment training to all of their employees, regardless of what state they're in. State statutes requiring or encouraging training are in Connecticut and Maine have long required employers to provide sexual harassment training at least once. Connecticut requires that training only for supervisors, and Maine requires a training for all employees. Since California AB 1825 became effective in 2005, California has required sexual harassment training for supervisors every 2 years. In 2018, New York State and New York City passed laws requiring annual sexual harassment training for all employees. In 2018, Delaware also passed a law requiring sexual harassment training every 2 years. In addition to states that require employers to provide sexual harassment training, many other states such as Colorado, Florida, Massachusetts, Michigan, Oklahoma, Rhode Island, Tennessee, Utah, and Vermont have laws that strongly encourage employers to provide such training. As things continue in the news, I'm sure that you'll hear more about those laws changing as well. Some other hot topics to keep on your radar. As the DOL gets ready for another year on their new overtime law, the U.S. Department of Labor is on its way to issuing a new rule to determine what workers are eligible for overtime pay, and employers are expected to see a salary threshold higher than the ones that were in place since 2004, but considerably lower than the one that was previously sought. The Department of Labor finished a series of listening sessions for interested parties on October 17th of this year, in which it gathered opinions from stakeholders. These sessions were in advance of issuing a notice of proposed ruling, which is scheduled for March of 2019. Many expect the Department of Labor to propose a new salary with this salary threshold in the range of $32,000 to $33,000. That would adjust the current level for inflation and make far fewer workers eligible for overtime than those would have been under the 2016 rule. So the next steps that we're looking at is if the notice of proposed ruling is issued in March and another comment period will follow, then the Department of Labor will take more time to examine the comments before issuing a new rule. So given the amount of interest and work involved in issuing the new rule, several observers have come to the conclusion that they don't expect there to be any type of limitations or information going out on that until sometime in 2020. HR tools. So we have some exciting news. We have new tools to aid you in your compliance and best practice efforts. In partnership with BLR, which is also known as Business and Legal Resources, Sikich is happy to announce a few new tools that are now available to their clients at a much lower cost to aid you in your efforts to fulfill your compliance and best practice efforts. The first is our Employee Handbook Builder, which is a self-service tool, and it provides you a license to the Handbook Builder, which is good for 1 year. It streamlines how you'll update your handbook, and it's simple enough process that beginners can use it, as well as it's flexible enough for experts. It's written by top employment attorneys, and it'll save you time and money because it's all completely internet-based. Unlike some employee handbook softwares where require you to download an application to your desktop, with our Handbook Builder, you can work on your handbook from any computer with internet connection. It complies with all state and federal laws, and whether you are building a handbook for one state or several states, it all comes at the same price. It's always up to date. You'll save on printing and distribution because you can send a link with a username and a password to your employees for access. It's not just a sample employee handbook. It guides you through a customized process, so you will answer questions and you set it up with key provisions, how you want it, and this service helps you create your own customized handbook from start to finish. It's perfect for large or small businesses, whether you have 1 employee or 1,000. HR tools training today is another option that we have available to you. It's web-based interactive self-study training. We have over 450 courses available, and you pick and choose from our extensive course menu and build your own training curriculum. We have several that we have set up, and they are only suggestions. You could do it from everything from compliance topics to new supervisors, employee training on safety and customer service, any other topics that you might find relevant. We have discounted pricing for packages. Each employee that participates would receive an individual login, and they would be able to take quizzes, receive a certificate at the end of the course. So offer a wide range of courses, and it's something that can be taken at their convenience at your time. Last that we have is some exciting news you might have read or heard about, that effective November 1st, Sikich announced that it acquired the business of Executive Alliance, which is a human resource consulting firm that helps businesses across industries implement and optimize payroll and human capital management technology processes. Executive Alliance, which was founded in 1992, works with companies including Fortune 500 firms across a variety of industries. Their consultants are human resource professionals who help companies build their human resources, benefits, and payroll management processes and successfully evaluate and integrate technology solutions. Sikich's human resource consulting practice covers all disciplines of human resources. Comprised of generalists and specialists, the practice supports businesses across industries with recruiting and onboarding and compensation and compliance, benefits, employee relations, and development. With the addition of the Executive Alliance team, we will help companies develop mature and technology-centered human resource operations. So the next several pages will show you the different services that we are now able to offer as far as supporting payroll and the information technology. And that concludes our presentation for today. If you have any questions, Again, you feel free to reach out to either Debbie or myself. Our contact information is on the page, or you can reach out to events@sikich.com. Thank you.